Hey everybody, welcome to my channel. I hope you guys are all doing well today. In this video, I'm going to explore the mechanics behind Ampleforth. Despite having Ponzi-like elements, I think there's a chance that this model is sustainable. What they're doing is highly experimental, so there is a chance that they might fail. My hope is that by watching this video, you'll learn the basics. I think most people who've bought Ampleforth and have decided to put it into the liquidity pool on Uniswap don't have a strong understanding on how the loop works. So my hope with this video is basically to enhance your understanding of how the loop works and why it's potentially sustainable. And if you guys wanted to join a community of like-minded individuals and you guys wanted to connect with me directly, I encourage you guys to check out my Discord by clicking the link in the description below. And if you're into DeFi, make sure you check out the channel I have dedicated to DeFi. I'm blessed to have a nice, diverse group, and we have a handful of people in there that do their due diligence when they're researching investable DeFi projects or DeFi platforms, and they're very good at responding to other people's inquiries and comments. So again, if you're interested, make sure you guys click the link in the description below. It's only going to be active for the first 25 clicks, so I would recommend that you guys move fast. With that being said, let's go ahead and dive into this video. Begin with, let's go ahead and talk about how the mechanics works, why this was the catalyst for the pump that we saw, and why it may be potentially sustainable. I'd like to premise all of this by saying that it's highly experimental. There's no guarantee it's going to work. But in my view, and in the view of others, this is definitely not a Ponzi scheme. Although I think many Ponzi schemes may model themselves after this once they dissect the project and figure out why we had this huge pump. This all started with the incentive program through Uniswap and Geyser. By providing liquidity to the ETH/Ampl pool on Uniswap, you were eligible to get bonuses through the geyser. So not only did you accumulate fees through the Uniswap pool, but you also got Ampleforth through the geyser reward system. And the geyser is designed to incentivize individuals to keep their liquidity in the Uniswap pool, because the longer they keep their liquidity in the Uniswap pool, they'll get increasing rewards. It's capped out at 3x, so by 8 weeks, you'll get 3x the amount of bonuses that you're eligible for, and every day that number increases until you hit that max of 3x. And this was actually a pretty smart move, because a lot of times when we have these liquidity provision incentives, you'll get this transient rise in deposits, but those deposits will end up leaving as soon as the incentive period is over. So that's actually what sparked the buying. So people began to buy the Ampl token in order to put in the Uniswap pool. But when people buy the Ampleforth token, this generates volatility. It creates arbitrage opportunity for traders, and all of that contributes to the volume generated on Uniswap. And as the volume on Uniswap increases, so do the rewards paid out to the users, because they get a portion of the fees generated by that pool. And because people wanted to participate in this incentive, they had to buy Ampleforth tokens. And that buying pushed the price of the Ampleforth token up. You witnessed expansionary rebasing. And by that I mean they increased the supply of the Ampleforth token when it was above $1.06. So anybody holding Ampleforth token would have received more. This rebasing affects all Ampleforth tokens, including the Ampleforth tokens in the Uniswap pool and the geyser. So by participating as a liquidity provider, not only are you getting paid fees through the Uniswap pool, you're also getting that bonus from the geyser, and you're getting more Ampleforth tokens in both the geyser and Uniswap due to rebasing. Perhaps I'm being a little bit hyperbolic here, but in my judgment, this is probably the biggest compounding effect in human history. And so because of that, a lot of people made a lot of money real fast. And typically when you want to create a community, you need to have economic or monetary incentives aligned. Given that a lot of people were making a lot of money, the Telegram channel for Ampleforth just blew up. Not only that, but some influencers who got in early also became very vocal on YouTube and other social media platforms. In a way, that's sort of like free marketing for the project. And because they were so vocal, you saw so many interviews, you saw so many people talking about it. This led to even more buying of the token, bringing us back to the start of this loop. Before I move on to the next segment, whether you guys agree with my assessment or you disagree with it. And more importantly, if you have any questions about it, make sure you guys express that in the comment section below, and consider signing up for the Discord if you wanted to have a dialogue with other people who invested in the project. Next, I think it's important to talk about the composition of the ecosystem, which players are involved, and what are their incentives for participating. There's probably more participants than the ones I'm going to outline, but let's start off with arbiters, traders, liquidity providers, and Ampl token holders. Sure, there's probably some overlap between liquidity providers and Ampl token holders, but you have to remember you have people that invested in the project very early, a lot of the seed investors that have a large chunk of the tokens. So I'm going to categorize them as Ampl token holders. Arbiters are present in all markets, whether that's the gold market, the silver market, the legacy stock trading market. In fact, a lot of the lending platforms you guys use, they'll lend to people who engage in arbitrage trading. And they serve a very vital role because they help achieve price uniformity across various exchanges and platforms. And these arbiters perform the same function with Ampleforth. Ampleforth token is likely to be listed on more exchanges. It's likely to be integrated into DeFi protocols. So this is a market participant that we definitely need. Secondly, we have traders. They're going to swing trade Ampleforth tokens. They're going to short it when it gets a little bit out of control. They're going to long it when it's oversold. In order for arbiters to do their thing and for liquidity providers, you need to make sure that there's not too much slippage. If there's too much slippage, it's going to discourage other market participants from coming in and contributing to the ecosystem. And lastly, you have people holding the token for speculative reasons. And for the most part, that's what the community is composed of. Individuals who have skin in the game are going to be the most vocal. They're going to be the most interested in the project. And coming back to what I was saying earlier, it's almost like free marketing for the Ampleforth team. You have a loud community that's advocating for the project, educating members. Not only that, as we saw with the FUD related to Zeus Capital and Link, you need a robust community to defend against any potential fear, uncertainty, and doubt. And in particular with Ampleforth, that's very important. We saw the immense amount of FUD as the token propelled itself to the top 30 in market cap. I believe at one point it passed Compound and Maker in market cap. Although I may be omitting certain market participants, just the four that I mentioned are working in synergy, and it kind of shows you why free markets work. These market participants, they're motivated by self-interest. And despite these guys pursuing their self-interest, collectively speaking, they sort of synergistically contribute to the success and well-being of the ecosystem. And on a macro level, you also see that with the economy as well. So to wrap this up, the point I'm trying to make is, as long as there's incentives in place for people to extract value from the ecosystem, there's a good chance that this will continue to persist. And the longer it persists, the more likely it is for the team to be successful in achieving their end, and perhaps even getting this protocol broadly adopted. Now that we've covered who the market participants are, I wanted to highlight the last market participant that I mentioned, which was the holder or the investor. In this Ampleforth IEO and token distribution report, we get a sense of where all the tokens are and how they're allocated to their respective parties. There's a comment that I got in a previous video that 10% went to investors, retail investors, and 90% went to VC or seed money investors. But by looking at this, you can see that's clearly false. I think that individual probably saw that 10% were available in the IEO and made assumptions about where the rest of the tokens went. In this video, I'm not going to go over whether this token distribution is equitable or if they did the right thing, because this whole model for fundraising, it's a completely new paradigm, and all the projects are doing different things. So even if we had a way to compare this with the project in the past, it would likely still be an unfair comparison, because everybody's doing something different. But one thing I did want to go over was the fact that these tokens are on a scheduled release. So you can see here that when it hits this line here and it goes flat, that indicates that 100% of the tokens have been released to that group. So you can see here the IEO investors, the retail investors, they've already received 100% of their tokens as of November 2019. But if you look at the other groups that have the token, they won't reach 100% until November 2021. Not that they couldn't dump the tokens here, but you can see here the team was very cognizant of large investors potentially dumping on the exchanges. And they thought this was a good way to mitigate that because they do want to achieve some level of equilibrium. They want to see the price fluctuate up and down. And if you have these large whales, these large investors who keep unloading on the retail investors and they unload on the market, it's going to make it more difficult for them to achieve that equilibrium that they're seeking. I'm not suggesting that this is going to work or this is fair, but it's something to take into consideration if you're an investor already or you're looking to get exposure. I'll go ahead and make sure to link this in the description below, but you can see here that they have a very rigid vesting period for the various investors that were involved. To end the video, I just wanted to share my thoughts and my plans, what I intend to do with the balance that I have staked in the Uniswap pool. Originally, I had planned to sell some of it off, thinking that I could buy back on the dip. In retrospect, perhaps that would have been the better move, but I think there's a reasonable chance that things will pick back up. And in the long term, we're going to see a certain level of saturation as people become more comfortable providing liquidity. And so while we wait for that to happen, it's not like we're not being compensated for it. We're earning fees through the pool. The geyser is progressively increasing our rewards. And by the time things picks up, who knows, we'll be eligible to receive 3x by then. Also, you have to remember in the Uniswap pool, it's a 1-to-1 ratio between ETH and Ampl, and it's based on the dollar value. So as Ampl falls in value and Ethereum rises, it's almost like it's a dollar cost averaging and buying Ampl on the dip. So again, there's three things that are working for your favor as you provide liquidity. You have fees generated by the Uniswap pool. You have the geyser rewards that are going to be increasing. And based on the way the Uniswap pool works, it's almost like you're buying Ampleforth tokens on the dip. And when you see things turn around and the Ampleforth market cap starts to increase, I'll be in a very good position to benefit from that. Sort of the best analogy that I could come up with is Bitcoin miners. Imagine how many Bitcoin miners decided to close shop after Bitcoin made its first parabolic rise up and it went through its first bear market. I'm sure there's some miners who decided to continue mining, but also there were miners that capitulated, that decided that Bitcoin was going nowhere and that they're going to stop mining altogether. Obviously, we know who made the best decision in retrospect. And with Ampleforth, instead of having miners, you have liquidity providers. Assuming that the project sticks around and they continue to grow in market cap, when they do recover, when they do make their rebound, there's a good likelihood that the people who continue to provide liquidity after Ampleforth went through its first big sell-off, they're going to benefit the most in the long term. The way these things work out in terms of investments is that the people who participate the earliest are obviously taking the most risk, but they're also going to get the biggest rewards if they stick around and the project succeeds. Well, that pretty much wraps up the video. And to end the video, if you guys enjoyed today's insights and you're interested in having a one-on-one session, or perhaps you wanted to join my private Discord channel and have direct access to me, consider checking out my Patreon. In addition to all these services that I just mentioned, there's much more that I offer if you sign up to be my patron. I've said this numerous times before, but it's almost like having your own personal industry analyst that's very accessible and generous with his time. I think it's a really good way for you guys to streamline your learning, especially with the volatile market like this that can move pretty fast. Rather than investing hours of your own time researching this, why not take the shortcut and talk to somebody who's already done all the digging? If this sounds like a service that may benefit you, I welcome you guys to sign up to be my patrons by clicking the link in the description below. And if you guys enjoyed the video, do me a huge favor by liking it. I'd love to hear your insights in the comment section below. And don't forget to subscribe. This is CryptoOneStop signing out. I'll talk to you folks next time. Bye.